Once again, everybody, welcome back to Markets on the Move with Oliver Slope and myself. And it's a pleasure to have you with us as we open up a new trading week here. A mixed bag on the grains. Soybeans kind of fell out of bed there, Oliver, but the corn market was able to kind of claw its way back in there and managed to eke out a little bit higher close at the end of the day. Wheat actually showed a little bit of a sign of life. Livestock trade, I don't know how healthy that looks. We'll talk about that in just a second. First of all, now that you've recuperated from the Pro Farmer Midwest crop
Still
fair,
recuperating, I
yeah,
might add.
and still have a chance to think about it and digest what you saw. What do you think of the market's reaction now to open up the week after everybody went through all the numbers?
Well, last week the underlying theme for much of the week was underwhelming. Outside of a few really good fields, mostly in McLean County, but outside of that, largely underwhelming. Which seems weird to say about what's still probably going to be a record crop, but the USDA set those expectations so darn high, and they kind of leapfrogged a lot of ground in the middle there. And I don't know that anyone really believed that 188.8 was going to be the final print at the end of the year. Just looking at the price action following that report, we were 14 cents lower on report day, but that marked the low, and we were able to claw back and gain some ground back then. So I think a lot of folks had been pricing in reversion to that yield estimate. Pro Farmer kind of confirmed that, and I think that's probably where we're going to be at, trading that 183, 184 range here for the time being. Hopefully we continue to see demand pick up. That's really the underpinning fundamental catalyst that this market needs to really stabilize. If that starts to dissipate, I wouldn't be surprised to see more downward pressure.
We had a fair-sized range in the corn, but it closed pretty close to the low of the range. What does that mean?
Well, we can pull up the chart. I mean, technically, I think you could make the case that the price action to start the week was largely, still healthy and constructive. We didn't do any technical damage. We just kind of ran out of gas, so to speak. We got up near the 50-day moving average, which is this red line here, and pulled back, but we're still holding these support levels, the 20-day moving average, and then this yellow box, or kind of a pivot pocket that we outlined last week near 407 to 410. So that's going to be the area to keep a very close eye on through this week's trade. I remain pretty optimistic on corn that we can continue to kind of carve out a low. Looking at historical tendencies on the 5-year specifically, this is a time of year where we can start to see that low get carved out. Longer-term price averages still drift a little bit lower. But all in all, I think a lot of bad news is baked into the cake here, but we need to see these technical support levels hold near 406 to 410, a break and close below there, and that would probably neutralize my optimism in the short term.
Well, I had sent you a message earlier today that here in the Mid-South, of course, I'm in the Nashville region, and man, I can't tell you how much the corn has really ripened and matured here over the last week. Of course, in this area, we've been fighting, heat index values well over 100 degrees for over a month. Finally cooled off the last few days, but my gosh, the corn is really ripening. And the soybeans are dropping all their leaves in this area here on the ones that were planted in the spring. I can't imagine harvest is going to be very far away.
It is. It's knocking at the door. It's hard to believe that we're almost in September, so that's going to be the case for a lot of areas as we continue to move through time, as we always are. But you're talking about the moisture and the heat. I think that was a large takeaway from a lot of farmers, which led to a lot of underwhelming findings across really the central path of our route through Indiana and Illinois. Those farmers probably could have used some moisture, and for soybeans could certainly still use some moisture. As you'd mentioned, we do have some cooler temperatures working into the forecast, but not a whole lot of precipitation to follow along with it. So again, beans, I think that's going to be a question mark going forward. From the technical standpoint on beans today, pullback, a correction. Wasn't really a whole lot of technical damage done just yet. The upper end of last week's range comes in near 1045. That's going to be a level that we want to hold through the week. A break and close below there, and maybe we're back to square one where we started on that big breakout move last week, and just below that the cluster of major moving averages. So next week, tomorrow's trade, it can be pretty important, I think, for setting the technical picture for the rest of the week.
Do you watch Fibonacci retracements very much on a move like this?
I used to watch Fibonacci's a little bit more frequently. The big ones that I look at are really just the 50% retracement. So just by eyeballing it here, that'd probably come in right near that cluster of major moving averages. So again, I think that's going to be a very, very important pocket to hold if the bulls want to sustain this momentum and break and close back below that, and the bears are back in the driver's seat ahead of a seasonally weaker time of the year for soybeans. So,
Well, it doesn't appear that the EPA ruling that came out Friday about what to do with the RIN waivers and that sort of thing, it doesn't appear that it really helped the market any.
It did. It gave it a little knee jerk, but really, again, not a whole lot of follow through. You and I talked about China last week really not coming to the table and being there for purchases of soybeans like we need them to be to have a sustainable rally. It's nice to get a little shot of adrenaline on some other outside market headlines, but the big ticket item is really having China come back into play and buy U.S. soybeans, and they haven't done so in a meaningful way. And I think that's going to probably keep the upside limited. Again, technically, the chart still looks pretty constructive, but we need to defend those support pockets, and it would certainly help to get China back in the market or some other fundamental catalyst here to get us back towards the upper end of the year's range, which comes in the 1070s, which I think is achievable, but getting out above there with some conviction, we're going to need a bigger, stronger fundamental shift.
Do you think these levels are something to maybe take advantage of in the soybeans, or do you have higher hopes?
I think we can grind out a little bit more to the upside, but if you're a producer saying, man, I wish we would have got some stuff sold at 1070 when we were down at $10 just a couple weeks ago, this is your opportunity to do so. We really like leaning on the options market to have that flexibility, establish a floor while you keep that upside open. So even if you are optimistic that we can get higher prices again, options a good way to at least get a little sleep at night in case we do see a technical breakdown on the back of the recent constructive action that we've seen recently.
Do you think we found support in the wheat market yet?
Close. The wheat market is looking better and better every day, which sounds kind of crazy because it's been a pretty swift downtrend for the last several months. But here we broke out above trendline resistance last week, or in consolidation mode, basically in a sideways range for the last 2 weeks. We poked our head out above the 20-day moving average today for the first time since July. We were unfortunately not able to close out above there, but if we can take out today's high going forward and close above the 20-day moving average a few times in a row, consecutive closes is usually what we're looking for. I think that could potentially help spur a little bit of short covering. Seasonally speaking, looking at the 5-year price averages, this is the time of year where you can start to kind of carve out a little bit of a low. So we're optimistic. This is a counter trend move, looking at the chart, obviously. So again, going back to the options, I think that gives you a lot of flexibility in playing this without really risking a whole lot, knock on wood.
Does it seem kind of weird to you that Chicago's trading at a premium to the Kansas City market?
Yeah, it does seem a little bit weird. Chicago, the volatility, that's going to be the driver going forward. That's where a lot of the volume is. So that's really where we focus in on. Chicago, I think, has some upside potential here. We'll just have to see. Again, we talked about the U.S. dollar last week, and that could be a big catalyst going forward. If the U.S. dollar starts to kind of tweak out a little bit and trade back lower, potentially that'd be a tailwind. We did see it firm up a little bit today, and maybe that's what muted the rally that we saw happening earlier in the session.
Well, we had a lot to chew on in the cattle market to open up the week. Of course, we had the cattle on feed report, but then we also had a report of a human case of a New World screwworm that was found in Maryland from someone that had been traveling to Guatemala recently. Don't know how the market took that. It sold off initially in the day, but it did come back somewhat. So it closed well off its lows. What do you make of that?
Well, the open was a prime example of what we've been kind of waving a caution flag about. Is everybody's on the same side of the boat. If you get a bearish headline and you start to see some sort of panic, who's going to be there to buy it if everyone that wants to be long is already long? And this morning we saw October feeders touch limit down within the first couple of seconds. Now, there were buyers that were eventually ready, willing, and able to step in that propped that market back up. And if you kind of looked at it just at the closing basis, you thought it was kind of a ho-hum day. I think September feeders were down 70 and the deferred's down $1 or so. But there was a lot more going on in today's trade. Again, that panic and the headline and the uncertainty with that initial knee-jerk lower. Again, even if you're super bullish this market. Price action like that to start a session probably keep you up at night. So I guess tread lightly, because if we continue to get more headlines like that, or headlines regarding an actual animal infected, then I think that's when things start to turn and maybe spiral a little bit from there. Fundamentally, the cash market's still very stout, so I wouldn't be surprised to see that continue to be an underlying theme and keeping this market afloat. But there's a lot of headline risk out there with everyone on the same side of the ship.
So do you look at today in the cattle market as a minor victory, or do you look at it as maybe an incentive to maybe start taking some action in an accelerated manner?
Yeah, that's what we were talking about with clients this morning. Those headlines are very unpredictable, and I think it's a reminder that you've got to take advantage of these prices and at least establish some sort of floor. Again, whether that be with LRP or put protection, I think just having that peace of mind in case you do get a headline like this, which is largely unpredictable, that's going to be what keeps you in business, right? A good price is not necessarily going to be the best price, but you got to make sure that you're in business in the future. So again, establishing that protection, I think, is pretty prudent at these levels.
Hog market is really entrenched in a coil pattern, as I like to call it, or a wedge formation, and it's poised to probably break out one way or the other. Today it looked like it wanted to go to the upside, but it never got it done.
Yeah, and I think a lot of that upside momentum started on Friday's session. You can see it here where we got out above trendline resistance, but stalled out right at the red line, which is the 50-day moving average. Again, today was much of the same, just kind of coiling up in between that old trendline resistance and the 50-day moving average. I think you're also seeing a little bit of a seasonal shift from a seasonally weaker time of year into a seasonally friendlier time of year, specifically for the October contract. So I like kind of the upside from here. That goes against what I was feeling the past couple of weeks, but the seasons change, and I think that could be happening for lean hogs here, especially if we can get out above that 50-day moving average. Again, consecutive closes out above there is what we're looking for, and I think that would potentially open the door for another $4 or $5 in a relatively short order there.
So you're just waiting for confirmation?
Waiting for confirmation, absolutely.
Anything on the financials today that caught your attention?
Outside markets, relatively quiet. Looking at the stocks, S&P, NASDAQ, we do have a plethora of data this week. Tomorrow we've got durable goods and consumer confidence, and then on Wednesday we've got NVIDIA earnings, Thursday GDP and initial jobless claims, and Friday core PCE. So a lot of data that I think the market is kind of waiting for. I think the NVIDIA one is going to be interesting on Wednesday, especially for the NASDAQ. If you start to see a poor earnings report there, that could potentially shake the trees a little bit, see a little bit of weakness. The other things that we're keeping a close eye on, those precious metal markets, they got beat up a little bit today with the stronger U.S. dollar, but again, looking at the daily chart of gold here, you can see it was just a little blip and then came right back up. Silver took on a little bit more pressure, but still, all in all, we broke out above trendline resistance last week. That's going to now be support. So a little bit of a pullback in the precious metals, but still relatively constructive.
Interesting stuff. Well, of course, you post a lot of stuff through Blue Line Futures and your various media formats there. Remind everybody how they can find more information, because we have more than just talk about grain and livestock on there.
Yeah, that's right. We've got a great team in-house. I cover grain and livestock markets each and every morning and afternoon. My other colleagues in the office cover everything from precious metals, energies, indices, etc. So we've got a great team here, and it's not just the research, really. It's the ability to call into the trade desk and talk strategy or talk markets as little or as much as you need. And then, as you're well aware, we've got this great platform too, desktop and mobile, free to clients for using, whether that be just charting, trading, or just monitoring prices. It's a great tool to have in your back pocket along with our team here.
Great stuff. I think everybody needs to check it out just to see what's available. They might be surprised. Real high quality stuff. Well, thank you again, Oliver. Good to talk with you again, and we'll do this again on Wednesday. Oliver Sloup of Blue Line Futures with us today, and that'll do it for this episode. I'm Marlin Bohling. We'll catch you Wednesday afternoon.